Well, good afternoon, everybody. It's Tuesday, and we got a really fantastic topic. We got a really fantastic speaker. This is exotic stuff. We're going to talk about cybersecurity and energy. And with us today is Lior Finkel, the Waterfall Security CEO and co-founder. Lior, it's great to have you. Let me just first say thank you for joining.
Thank you, and it's great being here.
Lior is he's now a good friend of TPH. He's a friend of a friend, and we have met with him previously, and we're going to have a fascinating discussion today. As you all know, whether it's Colonial Pipeline or any of the other issues that have gone on in energy or any of the issues that might come our way, cybersecurity is a big issue, and it's something we all need to be paying attention to. And Lior is a 20-plus year hardware, software expert. He is Israeli. And as you all know, the Israeli community, particularly in the security side and the technology side, it's a really impressive world. So we're going to learn about all that today. And we're just really excited to have you, Lior. Why don't we go ahead and kick off? Mike Bradley, quite a few things going on from last week's SPR release to a little bit of news about a new deadly variant. And, you know, markets have been jumping around. Why don't you kick us off? Tell us what's happening.
Yeah, Maynard, thanks a lot. It's been a couple crazy weeks here of volatility, and like you said, the main issues the market is focused on, especially on the crude oil side, has been the SPR release, the variant that was that was announced last week, and obviously the Fed tapering, Powell's testimony today. So I'm going to go ahead and share the screen a little bit and talk about what we just said here, and maybe we can go ahead and go into this. I think Colin, I'm not going to really hit this testimony. Colin's probably going to hit this in more detail, but basically what the Fed's finally saying is something that Colin and I have been saying for weeks, if not months, that this transitory inflation issue is not transitory, and they pretty much admitted that today, and there's going to have to be some action. So we'll just kind of skip that slide and really look at this slide. Now, what this slide is showing is the CBO volatility over the last, couple of years. And what you can see here is, the volatility month over month is up 70%. The last time we had this type of volatility was back here. And you can just see what happens to the S&P when volatility goes up, on these stages. So right now, the market's is going down because volatility is up. So that's something to kind of keep an eye on, especially if the Fed starts to taper, rates start to go up, they start pulling money out of the system. High multiple stocks are going to be vulnerable. Now, as it relates to WTI, obviously WTI has really come off here over the last 2 or 3 weeks. It really started back when Biden started talking and jawboning about global gasoline prices have to be lower, crude oil prices have to be lower, and it's generally worked, I guess, if you can say it that way. What we do see is that crude oil has come down a lot, but there's very, very strong technical support here at $62 a barrel. Now, I would say the last time we broke through the 50 to 100 and 200-day moving averages was November of 2020. So we're in sort of new territory here from a technical standpoint. Another thing I'd also say is that we've come off. This is a relative strength index of the energy sector versus WTI price, and the yellow being WTI price and the purple being the energy sector. Typically, when you get below 30 on an RSI basis, that means something is oversold. What I would say here is that crude oil seems to be more oversold in the equity. So, guys are saying, hey, get into these stocks, are coming down quickly. All I'd say is, that's probably a fair assessment, but you know what? WTI has come down more than the equities, and so there is some risk here. And so, this leads to my last slide, and it was, what we were talking about a little bit earlier. The SPR announcement came out about 2 weeks ago, and it dropped crude oil from roughly 79 to 76. It's $3 a barrel. Last Thursday, this COVID variant came out, and it dropped crude oil by $10 from 78 to 68. And today, Fed testimony is basically, created a $5 drop at the bottom today from 70 to 65. So essentially in two and a half to 3 weeks, we've had crude oil go from $80 a barrel to $65 a barrel. And now we're going into an OPEC meeting that was pushed back a little bit, and we'll have an announcement on Thursday of what their actions are going to be. And I would say that with the SPR announcement, I think most people said that that's probably not going to go ahead and make them pause on the 400,000 barrels a day. I think the combination of this variant as well as this testimony is going to lead them to say, you know what, maybe we need to stop, take a pause here. Q1 is typically going to be a seasonally weak period. Supply is going to be greater than demand. So I think the issue we should be looking forward to on Thursday is whether OPEC raises 400,000 barrels a day or not. I'd say the odds are now that they're not going to. That wasn't the case a week ago, and it'll be interesting to see what the political ramifications will be from the Biden administration if they don't raise. And so I think that's where the markets are right now, crude oil markets. Bottom line is, like I showed earlier, volatility is up. Fed's going to be tapering. That's going to create more risk in the market. So instead of buying dips aggressively, I would not say that's what you should be doing right now. I think the equities, at least the energy equities, are about down $55 crude oil. We think normalized is more like 65 or 70. We think there's good value, but there's no reason to aggressively rush in here. There are good values, but take your time because it's a whole different environment than we've been experienced with over the last couple of years with Fed injecting liquidity as opposed to taking liquidity out. So we'll just leave it there.
So, Mike, let me just make sure it was clarified because the base case or what OPEC's been doing is adding 400,000 barrels a day. So when we're thinking about the base case, and we've been debating, maybe because of some of these things, OPEC will decide not to do that increase. But are those really the basic choices for what OPEC Plus does? Is either stick with the 400,000 or do less? Or is there some expectation? I mean, Biden, I guess, had wanted them to do more than that. Where is the market currently guesstimating what will they do? What's the base case?
I think the base case has been up to probably today is they were going to basically raise 400,000 barrels a day in January and potentially stop there because Q1 supply is greater than demand. Okay. I think with this announcement, the market now is probably saying, you know what, they're probably going to err on the side of not increasing 400,000 barrels in January and just step to the sidelines here. I don't think there's any expectation that they will cut.
Okay, great. Awesome. Matt Portillo, what's happening in your world, my friend?
Yeah, maybe just starting out on the oil equities that has been extremely topical for us on the upstream side over the last week or so with all the volatility. And I think as Mike mentioned, the stocks have hung in extremely well. And one thing that's been encouraging for clients on the equities themselves is the return of capital strategy, particularly companies that have buyback programs in place. Have actually been garnering quite a bit of attention and interest. And so I think as companies continue to announce these buyback programs that are more structural than one-off, that's going to be helpful because in times past, when we had bigger dips like this and companies were out spending cash flow, the hope was that you would find a new shareholder to come in and step in for the stocks looking cheap on a multiple perspective. But now that we have companies actually physically buying back their stock with free cash flow that is sustainable over the cycle, I think the sentiment's been a little bit different. The only other thing I would add to Mike's comments is, yes, there's been a lot of volatility on the front end of the curve, but quite frankly, most of the clients that we speak to are more constructive, similar to ourselves, on the 2023 through 2025 curve versus strip. And that's really predicated on the lack of incremental supply adds and potentially a reduction in OPEC spare capacity as we step out over the next few years, and a fairly robust recovery in global demand that is sustainable through the 2025 timeframe. So while the stocks have pulled back and they have actually outperformed the commodity, I think you're seeing people just slowly adding to these dips for a multi-year run on the equity front as we continue to believe that $70 to $75 over the cycle, and especially as the dwindling stocks of spare capacity globally continue to tighten beyond 2023. Conversely, on natural gas, unfortunately, we are becoming a bit more bearish than even where we were a month or so ago. What's happened here is supply continues to outperform, and a lot of this is really coming out of the Haynesville. So for just a quick update here, Haynesville production hit 13.5 BCF a day. That's about a BCF a day above our production expectation for November and December. On top of that, we've seen all-time highs on production out of the Bakken from a gas perspective, out of the Permian, and even a little growth out of the Marcellus, which is a little surprising. The total supply in the U.S. is now up to 96.5 BCF a day. That compares to our modeled November number of about 94. This has been partially offset by record LNG exports. We've hit 12 BCF a day as Sabine Pass 6 starts up. But unfortunately, after Calcasieu, there really isn't anything in the queue in 2022 to help continue to drive demand. So while a lot of the headlines have been pointing to weather, and weather has been very negative from a gas demand perspective heading into December, the forecasts are warmer than expected. Quite frankly, the undercurrents on supply are a bit concerning. I think that's going to take some heat out of the 2022 curve. Previously, we had talked about fundamentally having support at 350 to 375 natural gas from Q2 2022 through Q4 2022. The curve is currently at $4 an MCF. With the incremental 1 to 2 BCF a day of supply that is showing up in the model, our expectations are moving closer to 350. So unfortunately, on the supply side, natural gas is catching a little bit of a bid from a supply standpoint, which is actually negative for the commodity from a fundamental perspective. And we continue to be fairly defensive in our equity exposure with our 2 buy-rated names in the U.S. and 2 buy-rated names in Canada, with the remainder of the group as a hold, as we do see downside risk to the curve as we step into next year.
Awesome. Colin Fenton, Matt's lead-in was reminding me of the Elizabeth Warren letter, and that's something we've been talking about. But hey, suppliers are responding, and we're getting more supply, and prices are going down a little bit. But I don't want to get us into all that. At least, who knows? We'll probably circle back to it. But what's on your mind today?
Well, it's a good point. I mean, even as a lead-in, we'll sidestep the politics, but it's a good reminder that economics works, that, higher prices encourage supply and discourage demand. And I think it probably would come as a surprise to hear Matt's comments about natural gas. My sense, at least my personal sense, is a lot of people still think natural gas production in the United States is impaired, weakened by, kind of the COVID experience. And the reality is we're back basically to pre-COVID levels, and we'll punch higher very soon if we're not already there. So that's a super important point and helps explain, as Matt just said, why the natural gas prices are coming down in the US, even as Europe and Asia probably are going to have to go even higher. Because if we do have colder than normal weather in Europe, we cannot have an 8% storage capacity number at the end of this winter. It's just not going to be tolerated. And so a $30, $40, $50 per MMBTU price won't be sufficient. We'll have to go higher. And then one other point on what Mike was talking about, demand works too. And so if you are Chairman Powell and you've watched the politicians all sort of go around trying to ban exports or tap SPRs or come up with supply side solutions at a price that's too low to curb behavior, this was something that the macro community has been waiting for a while, for the chair of the Federal Reserve to reestablish some sense of gravitas and credibility, and to remind everyone that you do not want to fight the Fed. The Fed has been very patient and kind, but if they want to raise rates tomorrow, they will. If he wants to say transitory is a banned word, it is. And it's just a big wake-up call that inflation can be squashed by one entity and one entity only, the central banks and the Federal Reserve in particular. And so my sense is you have an entire generation of traders who've kind of looked at the Fed's behavior as a weakened player on the field. Do not underestimate the Fed would be my battle-scarred advice to folks who haven't been in markets as long as Mike and Maynard and the rest of us have been, myself included. Maynard, if I could, I just want to give a couple of charts. I'm going to take you back in time 4 weeks to COBT episode 104, which we recorded on November 2nd. And at the time, we pointed out that we had the strongest TI time spreads in 17 years, and that they had quieted realized vol. Remember this scatter that we've shown recurrently over the past couple of years. Realized volatility in the prompt part of the curve was 20.3%. It was lower even than going into the COVID period. We said that probably cannot last much longer. We suggested there was good value in going long straddles on NYMEX WTI. Well, sure enough, what's happened over the past 2 weeks or so is the prompt crude oil straddles have surged in value. On November 2nd, at the money puts, which were at $82 at the time on Jan 22 TI, cost $3.65 per barrel. Today, they fetch $17.10 per barrel. So if you had purchased either an 82 straddle or an 80 straddle on Jan 22, back at the beginning of the month, it would have cost you somewhere between $7.75 and $8.35, depending on exactly which day you put it on and what time of the day. We went through the month of November, and our warning was be careful around the Thanksgiving holiday. You get the combination of less liquid conditions, and you'd already seen that the straddles were increasing in value. So there was already a warning sign kind of validating the view. As we got to the Friday and the announcement of the Omicron variant, of course, we blew to the upside. And as I said, now the straddles are even higher still. So super important to pay attention to that. And in a volatility space framework, what's happening here is you had the breach of $80 on October 14th in the CLF2 contract, Jan 22, attract folks who were more than willing to sell that upside and also to try to gain protection on the downside. So as I said, if you had bought an at the money put at somewhere around $82, you were betting that the odds were in your favor. Get down to November 30th, $65 is in the market. It's a decline of just under $19 per barrel. But as Mike reminded of us, this is very close to kind of core long run value. 65 to 70 is a perfectly reasonable estimate of the marginal cost of production in North America, the number that should be put in the DCFs. And so producers and consumers should really view, that a lot of work got done in a very short period of time. Look at the 50 Delta vols. We went from 32%, which is basically normal, to an increase of 46 vol points. It's a 78 number for the middle part of the vol skew. And you can really see how the put skew screamed to the upside. In plain English, this was the market freaking out about the potential for demand to be significantly weaker than had been built into options prices and futures prices. So you had a lot of, kind of comfortable complacency here for quite some time in the first part of the month, November 2nd, 9th, 16th, even the 23rd, suddenly readjust to the reality of the Omicron variant and Powell's comments to the banking committee. And then finally, you can also see it in how aggressively traders bought puts on that Jan 22 contract. They came from about 7,281 lots on $70 puts. They owned over 11,000 of them as we got to Thanksgiving Day. This was the actual day of Thanksgiving, so there was no actual trading that day. And then finally began unwinding their in-the-money puts as prices collapsed. So looking at where we're at today, it does seem like health authorities and policymakers may be overreacting a bit to the Omicron variant. There's a lot of description of it as being mild. So you find kind of one tranche of people sort of just shaking their heads saying, here we go again. Then you find on the other side, folks saying, well, if the Fed really does take away the punch bowl, that's not great for demand. And making some valid arguments about what that might do for 22. I think where it leaves us on the commodity side is be respectful of volatility, be respectful of the risks in the system, but perhaps it's not all as scary as some of the recent prices over the past 5 days may lead you to believe. Don't forget that you're looking at options trading, and that is part of what's happening here. Back to you, Maynard.
Awesome. Yeah, it's kind of ironic because not too long ago, we're talking about, the Biden administration is just right in the midst of what do we do about oil prices? They play a card that doesn't work. They play it meekly. The oil prices actually go up, but then they kind of get you wouldn't call it a gift, but Omicron and Powell team up to do what they couldn't do. Now, maybe that introduces a whole bunch of other problems, but it's just a fascinating thing to watch. Lior, welcome to our world. This is kind of what we do. This is how we have fun. But some words were used in the lead-in, which make me think of you. Sort of systemic risk was kind of in there. Volatility was in there. Shocks to the system was in there. And what could be bigger than cyber attacks when you think about the world we live in, the digital world, the world of moving things around, supply chain risk. So welcome. We're glad to have you.
Thank you. I'm happy to be here.
We had a great, I'll confess, we had a really fun lunch with you. That was probably about a month ago, just getting to know you, getting to know your company, your background, and the approach you guys take. I'll confess, it was probably 3 or 4 years ago, a CEO said to me, my biggest concern is a cyber attack or problem coming from a remote facility. And the energy world is full of remote facilities. We're global. We're all over the place. And so it was just finally kind of cool to meet someone who could explain the risk and the maybe some of the precautions that we ought to be taking. You just did a great job. So we're delighted to have you. It's my way of saying we've already had an hour with you and it was awesome. And we want to show you to the rest of the world. So let me get out of the way. Maybe just talk a little bit about your background and your company, and then we'll kind of get into it.
Sure. So, as I said, thank you for the opportunity to speak here. And indeed, lunch was great. We should do it again. I'm the co-founder and CEO of Waterfall Security. We're an Israeli headquartered industrial cybersecurity company. Our vision is it is way too easy today to penetrate the protections of industrial facilities, everything from control networks to SCADA networks to any type of computer network that actually touches and controls and monitors physical processes, machineries, and things like that. And we want to fix that part of the world and provide it with the adequate security that it needs. I think it's becoming much more clear to bigger parts of the market, and I'm talking about the critical infrastructure, the big industrial companies, everything from power gen to oil and gas to transportation to water and wastewater, and so on. That the world has changed. We see week after week cyber attacks, successful ones, targeting industrial companies, and it's there's no end to that. We don't see it slowing down. We don't see it changing, and it's relatively new.
And I think you mentioned in the lunch that, there's just a lot of people roaming around the planet. These are my words, not yours.
Yeah.
Who have a lot of training, a lot of capability, a lot of, they've come out of, I don't know if they've come out of military training or intelligence training, but there are a lot of people who have been, have learned a lot and developed a lot of skills that are now for hire. My words, not yours, but.
Yeah. So let's go 3-4 years to the past. When we would go to a prospect, an oil and gas company, an E&P company, doesn't matter. Many times, we would showcase our technology. We would give a overview of what are the risks and what are the threats outside and everything. And they'll say, guys, we are bought in. Everything, we believe you. Your technology is exactly what will fix the problem. But why should anybody attack us? We are this medium-sized oil and gas company out of Houston, or we are this water system out of Florida. Why would anybody take the time and effort and attack us? What's the purpose? We're not like this big shiny target that a terror attack wants to have to make their point. And to an extent, they were correct. I mean, the situation was technically, I think, inappropriate, but the risk wasn't that imminent as it is now. And what has changed is the rise of ransomware, the rise of industrial ransomware attacks that needed to have 3 pillars to be able to be so big and grow and be such of a, let's call it another epidemic that we can see. And the three pillars are capabilities, capabilities, motivation, and enough targets. So enough targets we have. Okay, there are way too many types of customers out there which are relatively exposed to remote cyber attacks. But the two other things are motivation and capabilities. Back in the days, 5 years ago, 10 years ago, most of the cyber capabilities, people and technology, were owned by governments. You didn't have a lot of really experienced and knowledgeable expert in offensive cyber out there. Now, in the last decade, many countries, the US, Israel, China, UK, Russia, and many others, built cyber armies. Each of those with thousands and sometimes tens of thousands of people working for the government, being trained, research, working in offensive cyber. These people retire. They go to the government or the military, they work for a couple of years, 10 years, doesn't matter, they retire. Most of these people are good people, all good. But when you are talking about these masses, some of them aren't. They go out to the public sector. This is what they know how to do. They want to sell what their expertise, and there are bad people that retain their services. And the techniques are in their heads, the knowledge is in their heads, the capabilities, they can rebuild what they built in the army. And now you can see a propagation of military level cyber weapons readily available outside, just waiting for you to buy them or even just rent them. And today you also have, a cyber attack as a service. You don't even need to know how to run these attacks yourself. You just rent a service provider and they'll do it for you. So that's something that wasn't available before. And the other thing is, 5 years ago, even more than that, you didn't really have a way to get paid. At the end, this is a criminal activity. Ransomware is run by criminal groups or individuals, and their target is to get paid. They need the ransom money. Now we have cryptocurrency readily available, used globally. They can sit in a different country where your feds has no way to get to. They sit in their houses or in a coffee shop, remotely hacking your site, getting in, and then tell you, we're in, pay us or else. And you can pay them in an online, immediate and untraceable or practically untraceable way. If a cyber attack would have ended with you going and getting a suitcase full of cash, we won't see so many of those. Or even bank transfer. It's all traceable, it's all easily and much more risk. So we have these three pillars that are now there, and all of this, industry, all of the ransomware business became a thing because of these.
Yeah. So everybody right now who just watched that is going, holy crap. Excuse my French. Like that sounds so scary.
I'm not sure that crap is in French, by the way.
Okay. PPE, I guess, is maybe I'll spell it that way. Do you mind telling us, because all of us kind of think we know, but we really, when you explained it, I realized that I certainly didn't, but what happened in Colonial and because that all of us got energized in energy when that happened, but not that we weren't already, but that was obviously a big event. Do you mind just explaining that from your perspective?
Sure. So first thing, what happened with Colonial was a big wake up call for a lot of the market, especially the oil and gas sector, but not only. Okay, so like technically what happened, and I'm basing everything here on public information, and everything here is nothing here is proprietary. So they have their Colonial has, as many other companies, they have their enterprise network where they run their business, and they have their OT network, the industrial network, the control network that in this case controls the pipelines and all of the operations there. So they were attacked by a ransomware attack, which targeted one of their enterprise systems, publicly known as the one of their billing systems. It was attacked. All of the data there was encrypted, and the attackers told them, pay us or we won't give you back the information. The thing is, because their OT network, because the control network that actually controls the pipeline operation is connected to their enterprise network, they couldn't know for sure, they couldn't be certain that any malware or any remote access was done to the OT network, and now their operation is at risk, and now they are in a safety situation, because if you have malware running on your control network, that's a safety issue now. And because they couldn't know, they said, okay, with your French, crap, let's shut it down because we can't keep it up in an unsafe situation.
I think this is where, I had the misunderstanding personally of like, well, they couldn't bill customers, so, they didn't want to give away free gas. That's not what happened at all. It was like, hey, this could be a much more significant problem. Okay. We have no way of knowing.
You guys know how this market works better than I. They could have continued without the billing system for 2 weeks and call their customers and say, guys, let's figure out how much you took and pay us afterward. It's not, both sides count the gas and the money.
Yeah.
So, I think that was just somebody's idea, but it doesn't make sense. Can you see a CEO or a board of a company say, let's shut down all of the East Coast, 40% of the East Coast oil and gas supply because we are not sure if we can bill everything correctly on time?
Yeah, that's not good.
No.
In a lot of ways.
No.
And then I think the other surprise we all had watching that, I guess, was not to dwell on this, but it was a big event. Then it was traced, right? Or the quote ransomware payment, we figured it out. Can you give us some color on that?
Can you rephrase the question? I'm sorry, I'm not sure.
Well, I thought, as I understood that event, is then we were able to trace the payment, right? So this thought about the ransomware is untraceable, that didn't turn out to be the case too, or maybe I have that one wrong. I
don't know enough about that part of the event, but regardless, the real damage was done. Mm-hmm. If Colonial could have just closed this issue with a $5 million ransom, they would do it every day of the week. The shutdown of their production for, 6-9 days, that's the big issue. This is where they got the big news, pictures on the newscast. And, I think even the attackers didn't expect that to happen. They just wanted a regular cyber attack, get in, do your ransom thing, get paid, move on. It's not good business for those guys too.
That's sort of the fascinating point is the bad guys are watching saying, this is bad news for us because now it's so visible and it's such a problem. Everybody's going to gear up.
Yeah.
Like it's going to, well, why don't you talk a little bit about your technology and kind of how it tries to address this risk?
Sure. So the technology which we invented in waterfall security is called unidirectional security gateways. And going back to the colonial example again, just as an example, that connection between their operational network and the enterprise network is usually done by putting firewalls there and whatever other security measures that you have. And as good as they are just not really fit. They were never designed to protect an industrial network controlling physical machineries and physical processes against a cyber attack. Even without getting too technical, all of the attacks that you've ever heard of, all of those cyber attacks that were made public, and probably 100 times more that were never public, were successful because somebody got in through the perimeter firewall, or else if the firewalls would defeat those attacks, we would never heard about them because they were unsuccessful. So our technology replaces those firewalls between the operational network and the enterprise network. Not all of the firewalls, just those, with a technology that was designed from scratch to protect control networks. We enable monitoring, we enable data sharing in real time, we enable the enterprise to have full visibility on what's going on in their production sites, in their industrial sites, if it's pipelines, if it's offshore platforms, if it's rigs, all of those, without the risk of anything getting back in and putting their production their production systems at risk.
And Lior, this the technology that you're talking about, at least as I listened to you at lunch, was if you think about it in the military context, this was preventing you hack into a remote airfield and find your way to the Department of Defense headquarters and then blow up stuff or something like that. This was developed as sort of the how to protect the nerve center of something extremely sensitive, like in a military context, if I understood you correctly. Well,
it was developed because from previous career, what was clear for me is that it's so easy to hack in from remote to even very secured sites. You can imagine that our government doesn't waste its time on chop liver. It's those that the Israeli military and so try to get into our highly secured entities. And the thing is, we never fail. I mean, to get in through the perimeter protection, assuming those are firewalls and VPNs and detection system, all the regular stuff, you never fail getting in from remote. It's always there. Sometimes it's harder, sometimes it's very hard, but you can do it. And I said, it doesn't make sense. Let's go and fix that. Let's go and find something that we can put in our own infrastructure and be safe, be able to run the business processes as needed, but not be so exposed as we are today. And we started back in the days selling in Israel, very successful, very widely adopted, and since 2010 we're selling in the US. Again, knock wood, very successful. A lot of deployments in probably every type of critical infrastructure. We naturally had and still have customers in the oil and gas industry, but since the colonial attack, and I think also because of the new regulations set forth by the TSA, this sector is now growing very fast, adopting new security measures and treating cybersecurity in a very different perspective than before.
You mentioned the new regulations from TSA. What are those?
The TSA issued a regulation. I think it's mainly for upstream and downstream, upstream and midstream. Sorry, relatively prescriptive regulation, which is not the case in many regulations in this market. So if I can give them, I think they did a good job. And they are asking, those entities to up their cybersecurity. So, hopefully, not a lot of them will be in the same situation as Colonial was.
And what would you tell us? So, if I'm an energy executive and watching all this, because I think the way I understood the problem, if you want the usefulness of the remote location and you want it to be connected and you want to know what's happening at your remote locations, then you're taking this risk, even if you have a firewall. And then the key word in the Colonial thing was they wanted to be sure that they didn't have an operational risk. And I think I'll let you explain it, but there is a way in which your technology, it physically can't be the case that you've had a penetration.
Yeah. Ironically, a Colonial attack wasn't an industrial cybersecurity attack. They attacked an enterprise, IT system. The thing is, because of the connectivity, they couldn't know. Because their networks are connected between the OT and the IT, they just couldn't know, and they did the right thing and shut down the production, so there won't be any safety issues. So on one hand, let's go to the need. On one hand, business side, where the enterprise network is, business side needs to know what's going on in each and every of their production sites, in this case, across the East Coast. On the other hand, to be able to get that information, all of the production data, which is generated in those OT networks, you need to open up that network and be able to get in and ask for the information and get it back out. And so by doing that, you open up your network and connect it to your enterprise network, which is connected to the internet. Meaning now there's a way from the internet, namely from everywhere across the globe, to remotely get into your OT network. The other hand says, let's keep all of those off the grid, just disconnect them. So they'll be dramatically more secure, but then the business won't be able to see what's going on. You won't have all of that valuable information that you need to run your business efficiently as you should. Solving that using firewalls and other, IT-based security isn't good enough. We just mentioned that before. So the technology that we developed is a combination of specially built hardware and software, which you deploy on your OT network's perimeter. The hardware enables data to go only in one direction, namely outbound. And the way the hardware is built, there is no physical capability for anything to go back in. So you can share information from your OT network, gather information from all of those systems that you need data for, pour it out through the one-way only hardware that we provide, and then on the outside make it available to whatever recipient or destination you need to. So by that, the business sides get all of the data that they need in real time to be used for decision making for whatever they need. On the other hand, your OT network is now technically off the grid. So you enjoy from both being dramatically more secure. Actually, there cannot be any more remote attacks through these connections, and you have all the data you need. And as we market this solution for since 2007. We have a lot of customers across the globe, and none of our systems were ever breached anywhere. It's that secure. And I'm happy to say that I'm currently now in a hotel room in Houston because I'm in a roadshow meeting a lot of new prospects from oil and gas, and you can see that this concept resonates very well with C-suite, board level, and also the operational level in like most of them. And hopefully we'll be able to assist a big part of this sector to get to a situation where their security posture is adequate.
And your company, you've got quite a lot of people. You're a big company, but do you mind just talking a little bit more about the company? We'll attach a link in this to your website and help people get educated. But you mind just talking a little bit more about the company itself?
So we are headquartered in Israel, 100 and something people now, growing really fast. We have a fully owned subsidiary in the US based out of DC, supporting North America. We have salespeople, marketing people, and technical people for customer support and deployment and installation. We have also subsidiary in Singapore covering APAC. And we have a newly opened subsidiary in the UAE, covering the GCC countries, which is a very nice new opportunity for us as an Israeli company. And it's going on very well in all of these regions. We are currently selling in Europe through headquarters, and we are about to open up a new subsidiary in Europe too, because of the growth in demand. And that's what, as I said, founded the company in 2007. So we are running for a while now, and these are exciting times for us.
And is there a when you run into you go visit with a company, you talk about the issues, you talk about your technology. I'm guessing a lot of CEOs say, we've been all over this issue. We've thought a lot about it. We have firewalls. When people don't embrace it, is there a reason? Does it just take time? Or I'm just kind of curious how the discussion goes, because everybody's worried about this, and there are, quote, other solutions. But what's that conversation like?
Okay, it depends a bit. It differs between sectors and also geographically. So let's focus on the US and oil and gas, or touch a few. But a few years earlier, many people just didn't appreciate the risk. They didn't perceive themselves as an interesting target. And so, what they had, they just said, it's working, or I don't need anything more than that. I mean, I've been running like this for 10 years. Nothing bad happened. What do you want from us? Why do we need to change? As I said earlier, we appreciate your technology, but maybe it's an overkill for us. This has changed. If this was the case in the past, like 7 out of 10 customers would say something like that. Today, it's maybe 3 out of 10. There are still customers that don't. Their awareness level isn't as it should be. But it's becoming, because of all of the public attacks, those that were made public, not just Colonial, there are others too. The C-suite level are much more aware of the risks. It becomes a risk that they can appreciate. It's not a technical something, 3 letters, geek talk. This is we lost money, we shut production, our share price is down. They understand it.
Is there a way, if I was a CEO, to say, how good is our system? Like, is the technology pretty good? Because I guess everybody has spent something to try to prevent this. Is there a way, if you're an executive, to say, well, I know we've spent a lot, Lior's got an interesting thing. How is there a way to evaluate the susceptibility of your system? Or do you just, how do you know that? Can you know that?
First of all, you would be surprised how what a low percentage of the market is actually investing and prepared. They are starting now.
Okay.
But in the past, I don't think that we can look at the mirror, at least not in the oil and gas industry, and says, yes, we did the best we could, we invested what we had to against cyber attacks, and we are at the right level. We are meeting customers where that they didn't even have a cybersecurity position. So how can you say that you were prepared if there's nobody that actually works in preparing and analyzing what you have and providing solutions? But that is changing again. You see more and more cybersecurity professionals at these customers, and you see more of these positions also held by C-suite or executive, not just somewhere low level. It's very hard to evaluate how good your security is and and what is your risk. Okay, it's a very hard task to achieve. But I think the situation today is so asymmetric in the sense that it's so easy to penetrate. It's so easy to get to a successful attack that it doesn't really matter if you're at level 0 or 1 or 2. You need to get to 9. Shutdown of production or a security situation that matures to a real event is out of scope. So get to the best practice that can be now, and then let's talk if we need to invest more or we're good. Sometimes I give the example. We are not talking about the icing on the cake. The problem is that you don't have the cake. So
right. Yes, that was my question. I thought I had a cake, but yes.
Yeah. So there's no cake in many cases.
Yeah, Lior. I mean, that some of that last statement you made was really interesting to me. That a lot of people say they might be prepared, but they're really not spending to be prepared. I mean, if you think about, sort of I think Biden and Krug talked about 16 different areas that are critical, that the Russians should stay away from, all that stuff. How much are we actually just seeing reported, and actually what's really actually happening behind the scene? It's like, if you were to put it in terms like 25 or 50 or 75% of the systems are really exposed that we never hear about. I mean, what's the real, danger out here that we don't know?
So the situation is really bad. Okay, a lot of the infrastructure here, and it's not just in the States. This is as I said at the beginning, this is like a global epidemic, but on the cyber side. Big parts of critical infrastructure in, let's say, the western part of the world are easily accessible from the internet. This by itself is a red flag. This, we don't even need to get into details. Is it 70 or 65? You have, I can't say that all of them, but a very big part of the industrial sites, especially the big ones, especially the ones that are part of the critical infrastructure, those 16 areas, are accessible from the internet directly or connected to an enterprise network, which it is connected to the internet. And until we fix that, we are in a very bad situation. Yeah, because when there's a way in, there is a way in. It can be used for the good purposes that you defined it to be, but it can be used for bad things because, again, once you can get in from your network to an industrial site to do whatever you need to do, a bad person or a malware can get in through the same way in and put you at risk.
I have a question too. First of all, congratulations on building your business. That's fantastic.
Thank you.
Listening to the conversation, I'm mindful of this idea of quantum computing. And as whole new ways of performing calculations and having ever more powerful computers come on, does that favor one side over the other? Does that make it easier for defense, or does that make it even harder to tackle this problem?
So two answers for that. I'll answer the direct answer first. So as it seems, it will favor the bad guys before the good guys. Today we have, it's not so related to, cyber attacks on OT, but a lot of the systems are secured. The information in system are secured by encryption. And when you want to connect between enterprise networks across your organization, so you use encrypted channels to do that, and all of those transactions are confidential enough. So if you can secure them in a good way, you can use it, and you're happy because you can enjoy all of the connectivity and all of the advancement of high tech with no apparent risk. Quantum computing probably has a way to decrypt current encryptions in a way that will render them irrelevant. And until there'll be new encryption technologies that will defeat that, we'll be in risk. That said, and I'm going back to our industry and our problem, encryption isn't the issue. The problem is that once somebody provides enter malware into your networks, you're at risk. We're not keeping that information secret, or we just don't want anybody to penetrate, and we don't want any unwanted code running in our systems. So, quantum computing in this case is some of the icing on the chair, or the cherries on the cake, but we still need to build that cake. For the enterprise side of the business, quantum computing can introduce a lot of another layer of concern. But it's more on confidentiality and intellectual property and proprietary information. Then on adding more risk to the industrial facilities.
Lior, I was just saying this has been fascinating, and it's obviously been pretty sobering too, because if you think about everything that we've talked about and you ask, what is the probability that we don't have some sort of operational cyber attack in the next 5 years? It unfortunately feels pretty small.
We just had one this year. We actually had probably thousands of, but we heard about, 20, 30.
Well, it's a great point, and I guess I was unfortunately thinking of something that's above the fold on the New York Times, or some horrific thing. So I'm glad you're raising this with us, and that we can raise it with our community. And it's really nice to know someone who knows so much about all this stuff. It's great to become friends.
Thank you. The feeling is mutual, and thank you very much for giving me this platform to talk to you and your audience. And I hope we can meet again soon.
Absolutely. Well, we'll connect some information, as I said, as we send this out, and be curious out there as you all listen to this. So what your reactions and thoughts are. But Lior, thank you again. It's really quite impressive what you're doing. And thank you for
very
doing
much.
it.
Thank you.
Okay. Bye, everybody.